Welcome back to Mortgages Made Easy. I'm your host, David Jackson. Today, we're joined by three of Prestige Private Finance's top mortgage brokers, Anne-Marie Blackler, Ivan Hughes, and Chris Nichols.
Thanks, Jacko.
Hi. Welcome. We're just going to have a bit of a chat today about the mortgage industry. Oh, for God's sake.
No, I like the laughing. Keep that in there. It shows that it's
I was
light-hearted.
on the edge and you
We're light-hearted and approachable.
And
within
Start again.
20
I
seconds.
promise not to laugh.
Shine that light on me. I'll sit and tell you my stories.
we've all been around for quite a long time in this industry, so just want to see what your thoughts are. We're currently in a stage where, as being filmed today, we're waiting for the budget to happen and what have you, which has caused a bit of uncertainty on the market. So what sort of trends have you seen over the years? What other sort of events that we've had to get over and where do you see the future going?
Well, I think with any events, it changes in stamp duties, changes in taxation. It takes a long time in the build-up where people will naturally hold fire and wait to see what happens. And then it takes a bit of time afterwards until people just settle with it. They accommodate it.
It tends not to take that long, though.
Yeah.
I mean, people think, no one, after we had the stamp duty changes, people think no one's going to buy for ages. And it did slow it down, but there was that race to get completed beforehand, which led to the lull afterwards, or the apparent lull afterwards. I mean, I've been around quite a long time, and I remember the recession in the 90s and things like that, where interest rates were at 13%, house prices were halving. And I bought at that period when the house price was relatively high compared to what it was like 18 months after the severe crash. And then it only took about 3 or 4 years to make a full recovery from half, house prices going by half. So I think what's happened over the years is whenever there has been an event, be it a recession, be it COVID or whatever, the recovery's been a lot quicker than people anticipated.
Yeah, it's like headline grabbing, isn't it?
Yeah.
So, your parents say, remember when interest rates went to 15%? They didn't go to 15% for that long.
Yeah, exactly.
But it's still a stat that's put out there, isn't it?
And the thing now, because we've got the budget coming, there's a lot of hesitancy. Nobody's really committing to buy. Or the ones that are still keeping an eye on whether or not they'll go through with it. And I think once the changes, whatever they be, kick in and we start seeing any difference, it'll probably be early next year to spring market where everyone will be used to it then, and it'll probably recover and everyone will forget what the changes are and get used to them again.
So obviously you can't...
That just now, haven't we, with the stamp duty holiday? And a lot of people had that sudden rush to buy before the stamp duty or holiday happened. And then people just kind of got on with things. It became the new normal.
Yeah. People get used to it very quickly.
Yeah. So obviously thinking it that way, again, we've obviously seen a lot between us. What are the best tips for somebody who's looking to buy? When is the right time?
I always say the right time's now.
Yeah, I think it always is. The right
is,
time is now. It's impossible to call either the top or the bottom of the market.
You'll miss it every time.
Yeah, and what's unique about housing on the whole, especially these days, is you are more than likely buying it to live in it. And that is a very, very different setup from buying something purely for speculation basis. If it is the right place for you to live in, that you love it, then this is the right place.
But when you say now...
I mean, what's the alternative? If you don't buy now, you stay where you are, or you stay renting. And if you're renting, that can't be.
But when you say now, what is now right for everybody, though?
Depends on your circumstances, doesn't it? Everybody's in a different position. If it's a family home and you like it and you're going to live in it for a while, then the fluctuations in the market are relatively irrelevant. They're going to go away. They're going to get ironed out over time and you'll forget them. I mean, a lot of people forget what they actually paid for their property.
Yeah. I always think the buying during a period of uncertainty is always a good time to buy. I know that sounds like a strange thing to say, but you have less competition. The prices may be a little softer. Even if you are upsizing, you might take a hit on the property that you're selling, but the one that you're buying, you'll make more of a margin on. So buying in a time of uncertainty is actually, for me, I think is actually quite a good time to buy.
I agree with that.
Yeah.
Absolutely. So I think some of the worst markets that we've all worked in a way, have been where you're having to phone people, or you have clients phoning you, telling you they've been gazumped, telling you that someone's gone 15, 20% over asking price. That's a really uncomfortable, really quite sort of vicious marketplace to be operating
That
in.
market's stressful, isn't
Yeah,
it?
it
Really
is incredibly stressful, and that's
And
not
also,
nice for anyone.
You don't know then when you're paying over the odds, you don't know how far is too far.
Yeah.
Whereas if you're paying under, at least you know that, you can see the stats of what has sold before historically.
Absolutely.
So you know that
You can make it a lot more considered right now.
Exactly.
Okay, so what you're saying is actually quite counterintuitive. If I'm being told that I should be buying a falling what confidence can I get from you guys to actually make sure I know it is the right time? Because obviously you don't. But how would you explain to a client that it is a good time?
Well, lenders are lending even
Yeah.
more so than ever, I would say.
Absolutely, lenders are their desire to lend money is very high.
Yeah.
We're seeing many measures from lenders, even over the last couple of weeks. Many lenders making the effort to accommodate people's desire to buy houses.
If
But let's face it,
if you're buying a good quality property, I don't think there's any risk whatsoever in this market, whether or not you think it's at the bottom or not. I mean, the problems have come because people have bought leasehold flats, which have led into high service charges and cladding problems. And they've got to be the only people that have really regretted buying at any time. The rest of them, if you think you're buying at the bottom or the top, after 10 years, it doesn't matter because the difference has been that much.
Okay, so a first-time buyer probably won't be buying a quality property. They're just going to be trying to get on the
You
property
can still
ladder.
buy a quality property
new
at any
builds.
price point.
New builds, if you're talking about new builds in that level, I mean, new builds have always slipped in when you first buy them. They always come down in value.
Yeah, you
over
pay
the
a
first period
you pay a
of time.
premium on entry into a new build product, but
Well, it
most
depends on
most buyers will
how
be
long
aware
you're
of
going to
that.
hold it. And as
Yeah.
long as you've got a good solicitor, you've got a good mortgage broker, you go through the risks, make sure you can afford it. And the risks of, how long is left on the lease, what's the service charge, are these things going to be reviewed? What's
Yeah.
the ground rent? Is that doubling? What the hell's all this going on? Take good advice. Make sure that you know exactly what you're getting into. And if you don't understand it, ask someone until you do understand it. And then once you know what the risks are, there's no shocks. So I don't think, what's your first time buyer? What's the alternative? Chuck $2,000 a month away on rent.
Yeah, I think you
What's
can
is
buy
a
a quality.
property?
Exactly,
I
you
mean,
can buy a
it's
quality
subjective.
property at any
Yeah.
price. Absolutely, you can. You really can.
So what checks can you do to try and safeguard yourself?
Well, you make sure before you apply for the mortgage, you check your credit file so you're not going to overpay for your mortgage by going to a lesser lender and getting a higher interest rate. So you make sure you're mortgageable yourself.
Yeah,
The property itself, if it's a flat, you don't want to do a full structural survey. You can do a home buyers just to check it. Get a good solicitor to make sure that the lease is in order and make sure you understand how the ground rent and the service charge situation works.
yeah. Make sure you know what's going to come in. What's going to come in the future?
Yeah.
Absolutely.
No shocks in.
And I'd say when you're buying a property, especially if you're a first-time buyer, I think it's good to buy as best as you can because you want that property to last you more than 1 to 2 years because after the transactional cost, stamp duty, solicitors, surveyors, etc., if you're moving again and you're upsizing within a couple of years, well then that money is only going to happen, you're going to outlay that money again. So if you can try and sort of future-proof yourself, at least for the first few years, buying it as good as you can when you first buy is a good.
Well, not to get too political on it, but of course the idea of stamp duty being removed is something that I think should have quite a lot of legs to it because it is more than certainly the thing that has slowed the volume, slowed the housing market dramatically. You have people that quite simply do not and cannot incur these levels of stamp duty 2, 3 or 4 times over a 10 or 15-year period, which many beforehand would have done. I can remember a very, very long time ago in life as an estate agent where someone paid stamp duty to move from a beautiful red brick mansion block in Chelsea. They paid the stamp duty on a flat that was at 1.5 million and they bought at 1.8. They paid the stamp duty quite simply to move from one side of the road to the other for better sunlight. No one would do that right now because the cost of that move is too high. The liquidity and the volume in the housing market has disappeared because the costs are high, which is also where we might see first-time buyers avoiding, as you look for problem spots in the market, you may see first-time buyers avoiding certain levels or certain mid-range properties because quite simply they're going to enter as soon as they can, and then they're going to stay there for a long time until they hopefully
jump to final house. There's no
absolutely
there's no ladder anymore. It's
Yeah.
hop on.
There is no ladder.
on the
Absolutely,
club,
it's you get on and you try your hardest to get to the top, and if you can't get there, I think there's a debate that says people just aren't moving.
Yeah.
So is this just a bit of a UK thing? Because obviously on the continent, they tend to buy their one house, live in it forever.
The generational homes are in the continent, aren't they?
Yeah.
You know, a lot of them inherit.
Yeah.
The families grow up there. They've got more land. They can extend. They can do what they want to it. So I think it's completely different. I think when you look at the big cities of the world, Tokyo, New York, and here, Paris, etc., it's similar because we've got smaller properties. In terms of in the centre, we've got more flats, and I think that people in almost communities become more transient. They move on a lot, so people don't hold on to them as long unless you're out in Surrey or home counties or out in the regions. You got a bigger house, and that can have a similar effect of being a generational home. But what tends to happen is the children migrate to London for work. That home gets sold and inherited by them, and then they go back and buy that similar house later on once they've got themselves up the ladder and they've got the kids. So
yeah, traditionally,
I think it's a very different model because London and the way the UK economy is so London-centric, I think we're always going to have that in and out of people.
Okay. So coming back to the quality of property, what advice would you give to first-time buyers as to what they should look at and what type of properties are suitable?
They can afford, really.
Some of it is, a lot of it is going to be afford, actually, isn't it? A lot of it's going to be what you're comfortable with on a monthly basis. But then everyone has different needs. If you're a single person or a young couple, you don't need 3 or 4 bedrooms for your 2 kids. You would look at it and probably say, I'll take the prioritisation of location
where do
over
they
everything.
need to be? Where's their work? What are the commuting? What transport's available to them? Do they need good schools? Do they need any schools? Do they need, do they want to be somewhere with a bit of a buzz to it? Do they need to be more central and take something smaller? I mean, that's a really subjective question because there are, I think, so many moving parts to the answer to that.
In the era of VAT on private school fees, we're certainly in some of, we were seeing, previous to this VAT on private school fees, we would see catchments, very good catchments especially within southwest London. You'd see a lot of people would move house purely
Just
for a
for the
good school, and I'm sure that's reflective across the whole of the UK.
It happens still.
And even more the pressure on it with this 20% extra on top of private school fees. See, there are different drivers. If you're not in that market, you're probably not going to pay the premium to live on that street without any children.
Yeah,
You can move around the corner and save yourself some money.
Keep hold of it as an investment and rent it.
I think it's everything is tailored to an individual.
Yeah.
And you can't just take one brush to everyone's life and tell them this is what they've got to be. Everyone has their own preferences. Everyone has things that they'll enjoy, things that they'll dislike more. I know I've got a really good friend who genuinely doesn't mind or hate noise and hubbub around them. They don't even mind if their neighbours are noisy. They're really happy in that sort of scenario. With me, I would hate that. I really like a little bit of sanctuary when I get home, and I like some peace and quiet. Everyone's different in what they like.
Yeah, exactly. So I think going back to the point, what should they look out for? It's so individual, isn't it? And it's whatever suits them.
Okay, agree. So I'm a first-time buyer, and I say, Anne-Marie, what tips would you give me? Again, what are the most important things a first-time buyer should do to prepare to get on the housing ladder?
So have you got your deposit together? That's where's your deposit coming from? How are your finances conducted? Are you in your overdraft?
Just as well, are you employed, self-employed? I mean,
that's employment.
You're right to work in the UK.
Yeah.
What's your share code? Lots of little things that they need to get right. And the best thing they can do as soon as you start thinking about buying a property, speak to a broker. They'll tell you, and that'll prepare you.
Yeah. Like, if you came to me and said, I'm a first-time buyer, I'd ask you where you were in the process. Have you spoken to anyone? Do you know anything about mortgages? Do you need me to go through sort of how the mortgage process works? Do you need to go through how the buying process works? So, I mean, we would have a conversation about pretty much everything and about what your ideas and thoughts are and what you need to know. And then I'll fill in the blanks. And then if there are certain things that you might want to discuss further about whether you should take a 2-year versus a 5-year, or how long should your term be, or, should I borrow more and buy a bigger property? Should I borrow less? We go through the affordability. And also, your financial status, like if you've got any kind of difficulties, if you've missed any payments, because that pops up every now and again, or CCJs, or something that you might not have thought of even mattered. And it happened 4 years ago, and you've completely forgotten about it. And then you go to make an application, and then you find out that it doesn't work. and it's because you've got a CCJ in the background, I mean, that can affect things. So I think we talk about everything openly and honestly, and then we sort of tailor a schedule as to where we go next.
Yeah, I'd say in these conversations, when it begins, your first few conversations are not about getting a deal from someone, doing a deal with someone. They're about helping someone understand what they're about to go through. And if you've been as honest, if you've been as upfront and given all the knowledge you've got to them, they'll come back to you when they're ready to.
Yeah, you give them an indication of what they can borrow if all things
Yeah,
are good.
absolutely.
If your credit file's good, if your pay is good, and then someone will say, should I get a car? Should I go? Would that affect it? Of course it will. I'm changing jobs. Should I wait till after the mortgage? No, not necessarily. There's lots of different things. And again, I keep saying it's down to your circumstances and what you're looking for.
Yeah.
But,
the most important part of any mortgage conversation for me is just as open, as much detail between yourself and ourselves.
Yeah, don't make assumptions and take advice.
Absolutely.
Take advice from your lawyer, even your agent, but, most importantly, the broker, because they're the one that's going to tie it all together.
Yeah.
You might like a property, but if you can't perform and get the money on the table, you're not going to get it. So do it properly. You can do it yourself. You can go straight to that West Halifax.
I mean, that's a good question. So you say you could do it yourself. Why would I come to you guys instead of
because you're going to get the best deal that's available to you, given what you're looking for, and given things that you probably not thought.
Okay, well, just to counter that, I could go online, I could find an interest rate, I could find the best deal like that, couldn't I?
Yeah,
You could easily get a list of interest rates from the internet.
Potentially. Sometimes, I mean, I know
Some of them more hidden than others.
We have some exclusive rates because of the amount of business that our mortgage network does, but people might not be aware that we might have a rate that's not available on the open market. I mean, most lenders prefer the buyers to come through the intermediaries anyway. I mean, we had a meeting recently with one of the major lenders, and they said it was an 80-20 split, from 80% of their business coming from intermediaries and 20% direct.
Yeah.
I mean, there's a reason
really
for
split.
that.
Yeah, a lender takes comfort that we've given advice, we've put them in the right place.
But going back to your point, if they see, I see a rate at X percent, 4%, so I'll go for that, and they go for it and they don't get it. Now, if they'd have spoke to a broker beforehand, we'd have told them whether or not they could have that rate. So they go for the 4%, didn't get it, go for the next one, didn't get it. All of a sudden, they get hits on the credit bill. Then it becomes more difficult. Speak to a broker and then they'll go, well, you can't have that or that, but you can have that.
Yeah.
And you can have that if we structure it a certain way. And have you thought about interest only? Why would I want interest only? It's an option to keep your repayments down in the early years, or you're going to have a family or anything like that. You may not want it now and you're in a position to have a repayment. There's all those conversations.
Absolutely.
How long do you want your mortgage over? 25 years, that's what everyone does. No,
You
they
could
don't.
walk down a high street, couldn't you? And you could go into the first 5 banks. They'd all say no. That 6th bank would have said yes. We could have saved you inherently
So
probably
much
about
time.
10 hours of time.
Plus your profile.
Yeah, if you ask me, if I get 3 no's, I'll probably give up. And you might have been so close to buying this house.
I had someone recently who was buying an ex-council property. They came to me and they said to me, look, Anne-Marie, I think this flat's completely unmortgageable, but my brokers, my agent said that you might be able to help me. They'd literally been literally, as you said, down the list of four lenders, of 4 of the cheapest lenders. Every single one said no. And I said to them, look, that's just because it was a bit of a quirky case. This lender's going to work well for you. I put it through with that lender and we got the mortgage offer within a week. But he was genuinely concerned that the property was unmortgageable. And it's just was that previous broker didn't do his due diligence. Sometimes it's a bit lazy and they just go,
It's experience.
yeah, I'll just put it with that lender, or I'll just put it with that one. And they don't even do any background checks on
Yeah, some
affordability
brokers don't
or
look at the
anything.
property
Yeah.
either. They just go, dude, what is it? Oh, it's a flat. Is it? Okay.
I always
Please.
think
Look at it.
in the side of something that people are considering to be unmortgageable, you may well get an option on the table for a client, but I would always be so honest with a client in that moment and say, look,
Yeah, if
I can do it with X and it's going to be this. We can fit this, we can do this for you. But at the same time, there are 10 or 15 high street lenders on this side that have said no. You need to
There's
be aware of
reason
this.
for that, yeah.
You need to be aware of your exit strategy as well.
Yeah.
It is not just always about being able to find it. It's about being able to find the loan, but caveating and always making sure people know the risks and the pros and the cons. There's always on both sides.
Yeah. I mean,
Absolutely. But this property was it was an ex-council flat in Chelsea where, the previous owner had a mortgage. We'd done plenty of mortgages in that building. And I just thought that this building is absolutely mortgageable. But if someone hasn't done their due diligence and just fired off a bunch of mortgages, applications with random lenders who may not or may or may not lend on it, then, I think doing your due diligence is the most important thing. But obviously, you always tell your client if there's a risk and if there is a chance that they won't, when they sell it, somebody else might not be able to get a mortgage.
Yeah, exactly.
We always have to make that clear to the buyer. But if they want to buy it, then,
Yeah, it depends.
That's
Depends what you want it for, doesn't it?
Yeah.
So in those sort of scenarios where you're getting lenders say no, then yes, from just being cynical from the flipping it over, should I have concerns that 3 lenders have said no before you found a 4th lender?
It depends on why they've said no.
Yeah, it depends on why they've said no.
So why would they say no?
If it's the property,
it's
the property. Yeah, I mean, if it's your credit file, your income, or every lender has different criteria.
Yep.
Be it on your residential states, your residency, whether or not how long you've been in the UK if you're not from the UK. Be it to your income, whether you're employed, self-employed, how much they'll lend to against your income. You got your expenditure, your outgoings, what lenders take them into account more than others. And then you look at the property, whether or not the lease is long enough, whether or not it's got doubling ground rent, whether, a variety of things. Whether or not
some don't like us going over a certain amount of floors. Some don't like tower blocks.
Construction types, cladding issues, all kinds of
exposure
things.
limits.
Mm-hmm.
Yeah, exposure limits, exactly. But if you go to a good broker, bang straight on the right one.
Yeah.
Okay. So looking on that, why to use a broker, classic, but over the years, clients have been a bit sceptical. Go, well, what are you getting out of it? Surely I'm paying more because I use you. What sort of objections do you get, and how do you explain to the client why you're worth it?
Yeah, I had that this week. A client said, "How do I know it's the best rate?" And I said, "Well, I think it was 3.9 something with whoever." And I said, "It's exactly that." She said, "How much do I have to pay you?" And I said, "It'll just be an admin fee, nominal. We get paid off the lender." "Oh, how's that paid for?" I said, "Well, it comes from the commission because we've done the lender's work by introducing the business to them, and it's already prepared and packaged. And they pay us for that." I said, "It doesn't affect your rate." I said, "This is a bank, this is a rate. If you went direct, you get the same deal."
Some buyers think that there's a hidden cost that they are paying.
They think the rate's enhanced.
Whereas if they went to me versus going direct to the lender, they would pay exactly the same. Everything would be identical.
Yeah. So
yeah, absolutely. But this is why when you're going through getting a mortgage, you'll get the fact sheet at the start.
Plus, you're not only getting someone to process the best deal, you're getting X number of years experience thrown into that.
Yeah.
But I've banked with my set bank for 20 years. Surely they're going to know me better than you, and they're going to give me a better service.
No, it doesn't
Necessarily,
work
and
like
not
that.
necessarily the best rate either.
Sadly, that's just not how banking on the wholesale works
Some
anymore.
lenders do give priority rates to their premier client customers.
Yeah, we don't
But
need to
we
be
have-
there day one. You can.
Yeah, and we have access to those rates anyway. So if they go direct versus coming to us, I mean, that same rate it's available either way.
Yeah, I mean, you could have banked with your bank 20 years and you can be a premier account club customer and you think, well, they've given me the best rate because it's an exclusive because I earn X money. They come to us and we say, well, NatWest or whoever is cheaper than that.
Okay.
And
And
you
it
never
doesn't
bank
matter
there.
if you're an
You never bank there.
executive
Yeah.
of that bank.
Yeah.
You still that bank is not going to break policy for you.
No,
They have their policy, and that is what it is.
But again, surely if I'm going direct to the bank and not having to go through you, that's going to be less time to process, surely?
Yeah, you've got to
No,
do it
not
all,
at
haven't
all.
you? Plus the
Why not?
Yeah,
It's a lot
not only
quicker
would
through a broker.
not only would you have to wait until the bank has enough capacity to start dealing with you, some of it, of course, can be done electronically and whatnot these days. You'll have to wait until the bank's got capacity to deal with you, which more than likely is going to be longer than I
and you want to be chasing it.
And
Yes.
then who are you going to chase? Because you'll have some kind of line that you might speak to one person and then you might speak to Tom next week and then it's Sam.
Yeah,
the
you've got
day
no
after.
relationship with
You've
it.
got
It's
no
a call
line
center.
of, yeah, exactly.
So you're saying that as a broker, you can actually transact quicker and get the deal through quicker?
Yeah, absolutely. Yeah.
Why is that?
We speak directly to the underwriters and we have business managers that we discuss cases with. If we need something expediting, sometimes they can do that for us. I mean, if they go direct to the bank.
Plus, you have service level agreements with us as well, which are generally quicker than what they will go direct to their own clients. But it depends on volumes, doesn't it? But they're heavily led towards the intermediary market, the broker-led cases.
As much as anything.
And we go straight on their systems. People don't realise that. We actually go into the systems that they give us to key on a mortgage application.
Yeah.
So we don't send it off.
No.
It goes straight on. It goes on the day we get it. And then all the paperwork that they need gets uploaded that day. And you'll have an answer in 3 days. And if the answer's no, we'll put it right. If we can. If we can't, we'll find plan B.
Yeah.
There's
You
another
won't get that
element
going
to,
direct.
there's another element to it for me as well, which is as sad as it is, but you are one of a lot of customers for a bank.
Yeah.
I can guarantee you I do not
You are
submit
an account
as,
number, aren't you?
I do not submit as many mortgage applications per week as Santander do. You are a genuine client of mine. I want to do well. On a human level, I would like to do well for you. I want to have a good relationship with you. And for that, you're going to drive it forward and put a lot more effort in than
Plus,
a system.
if you go direct to a bank as well, are they really going to give you advice? Are they really going to take the time to get to know you a little bit and find out what's going on in your life that might, and you may say, well, have you thought about this because of this? You won't get that in a bank. You might do in a bank, but it's very unlikely.
They won't give you other options. I mean, you go to a Mercedes car dealership and they'll sell you a Mercedes.
Yeah,
But you don't know there might be, a Skoda or a Range Rover
Just tell
or
them
something else that might be a better option.
It might be right in front of your eyes, but you
Might
can't
be.
see it.
But
also-
and the same thing, you go to HSBC, they can tell you what HSBC lends, but
Exactly.
whether or not that is the cheapest rate at that point in time, whether or not that is the best option for you, because it's not always about the cheapest rate.
But do you want to WhatsApp your bank at 10 o'clock at night and get a response? No. But if you WhatsApp one of us, you
You'll
probably
get
would
a
get a
response.
response, wouldn't it?
Well, in the modern world, surely with things like AI are actually allowing that to happen. You're probably not speaking to your human being, speaking to a bot or what have you. I mean, obviously the leading questions, and quite simply, I think some of the things we do, which is submitting cases at 10 o'clock at night for clients, get it turned around, uploading the documents.
Yeah.
It's really where you get the big wins. We're able to get those responses quicker and actually give better customer service. And obviously, once the client sees you in action, they understand it and instruct you. So on that, the way the industry is at the moment, we've been talking about a few things. AI. Where do we see that influencing the property market and mortgages in particular?
It's hard to say, isn't it? I mean, when the internet came out, I remember that. So that was going to put everyone out of work. Do you know what I mean? And then we've been getting robots for the last, 70 years. They've been coming, someone's saying, the robot's going to take over. And it's going to be the same with mortgages, I think. I think the property market, how it'll impact that, it might get a few things done on the administration side, but I don't think we'll have robots building houses or AI building houses. They may do the designs and the architecture and draw the plans up, but everything's got to be input. But as far as mortgages go, there'll be a tool for us. I don't think there'll be a tool necessarily for a client to go direct to. Will they trust it? I mean, we've all had cases where we've gone on to, say, ChatGPT and asked it a question or something like that. And you were talking earlier, and it comes back with a load of nonsense. You know it's nonsense because it doesn't know. It makes it up. And I'm sure that'll get ironed out over time. But if it is going to have an impact at the front end, clients who, directly to the client, I think that's going to be a long way away before it's trusted enough to have a proper impact. I think it's going to sit behind us and help us do our jobs.
So what influences have you seen so far?
Helps us with our systems, sourcing. So, I mean, we have a system that tells us what everything costs, what the cheapest rate is. It helps us, I guess, with our processes. But I don't think it necessarily, like you talked about trust, and I think that's a really important thing when it comes to the client relationship is trust. I mean, as I said to you, I don't trust. I'll ask ChatGPT something, and sometimes I might get a decent answer from it, and sometimes it will be so off kilter that, like you say, it's not correct. So, I mean, if you've got that element already of doubt with AI currently, how could you possibly trust that?
Yeah, I can't say I've ever used it for anything. I don't think I've ever logged
It'll
on.
be in the background
Oh,
of a
I
lot
love
of what
it.
we do, won't it? It'll be in the background.
Yeah, I'd imagine. I think on a client side, what it's probably going to do is be able to scrape huge amounts of data off the internet and give it to you. But then you're probably still going to come to a human to question that data. And even if it's an answer, you might well come to a human to say, it's told me this, is that correct?
Yeah.
and you're going to
Would
be
you take
honest.
out a loan for £1 million based on what machines sold?
You can read 1,000 books, and then you see there's a professor and he's so knowledgeable, but you can read all those books and digest all that information. You'll still want to know from that professor, in your experience, do you think X? And when you're talking to ChatGPT, are you going to say, hi, ChatGPT, in your experience? Because it's taking the experience from multiple people. And some people may not even be, decent sources that you'd want to get information from.
Yeah. You'd hope that what it can do is help buyers, is help sellers, it's help everyone in all walks of life. You'd want it to be able to help and be a very good assistant tool. And that maybe is what it would be. It would be admin. It would be making sure that we're always on top of, maybe people's end dates, or, reminding to check in with people, little things like that will help you become a better broker.
Little things are actually factual, because
you need it to be factual.
So much grey in what we do that it's opinion. And automation, yes, it can do so much, but when it comes down to what I believe the value of that property to be, again, we went to a lender the other day who someone questioned why isn't the bank doing 100% AVMs, that's automated valuations, and the bank's going, why would we do that? Yes, we're going to do as many as possible because it's cheap as possible, but there's a risk there. We still need a human interaction there. It's like, are you going to get on a plane without a pilot? Even though we know the plane is actually flying itself, every now and then the pilot takes control. But you're not going to get on that plane without a pilot flying you across the world, are you?
Yeah,
So I don't know. I wouldn't anyway.
Certainly not.
No, I wouldn't.
I'd be interested in seeing its advancement and how it helps.
I'd be interested in 100 years what it'll look like.
Look, in 10 years' time, we might maybe seeing a completely different landscape. But I think it'd be sort of...
Yeah, I think when my boy Frankie's 6 now, when he goes to get a mortgage, maybe the way we own houses will be very different then. The way we finance them is going to be very different.
Well, there's a whole thing of what 70% of the jobs our children are going to do aren't even jobs yet. And actually when I was at school, and probably you were in just started your career.
All right, well.
A mortgage broker wasn't actually a thing.
He started
just rolled up into financial advisors.
Well, it was building societies. You had to go there and get your money back in the day. And then I think the first brokerage was John Charcoal. And I worked there, but not right at the start. I joined later on. And they sort of started doing these 2-year fixed rates and things like that, which didn't really exist before. Then the banks got on board and they all started offering them, and then more brokers came in. So, the job didn't exist. I think it was...
So the way people transacted...
compared to the 60s.
So what it will be in 10 years' time will be different, but there'll still be a human element. I mean, again, when you used to have to go to the building society or the bank, it was a human being saying, decide whether they liked you or not. Do they know your parents? And do they like the parents? And then I'll think about lending you 3 times your salary if I like you.
We had to save up the same amount that the mortgage payment would be for so many months or years to prove you'll be able to keep the payments up. Which is crazy. But
very old school underwriting.
Very little repossessions in those days, but they didn't let much.
Incredibly prudential approach. Yes,
maybe we'll go back to those days. Who knows?
I think for what it is, maybe we do live in a world now where you want to be incredibly accommodating. You want to be as good for all buyer profiles and buyer types as you can be, and there are going to be people who would would almost want to do most of the job without actually having to pick up the phone and speak to someone. And you've got to adapt your business to make sure that people that want to be a bit more machine or chat-led have the ability to do it, but you can still be there to help them when it's needed.
I think with mortgages,
you don't want them to make mistakes.
People don't want mortgages, they want the house, don't they? So to take the mortgage on is ultimately, it's a very emotive subject, particularly for a first-time buyer. And they may ask the dad, and the dad's been through it before, and he'll give them some advice, dad or the mum or whoever in their family. But ultimately, they should lean back on a broker just to hold your hand. Maybe you're right about everything, but maybe you're not. And that bit you're not right about because somebody's guessed or heard it in the pub might cost you a lot of money in the future by making that mistake.
I think in the marketplace that we're in now, if you talk about the housing market itself, if you talk about the mortgage market, this is an era, a timeline of incredibly high levels of speculation, and fairly wild and aggressive speculation on all sides of it.
It's just the way social media and all that goes now. It's just everybody's
so
fighting for attention by spreading rumours effectively.
Yeah.
And the government are probably guilty of that as well. So,
but it would be a mistake to not embrace AI.
Because, when you're going down that route,
you want to be a forward-thinking company. You want to be up to date with your systems to make sure everything is sort of streamlined. And we do that, as much as, actually, I think recently we've gone through a whole new rebranding. And I think it's part of being present, of accepting it and moving with the times.
But obviously, with any industry will take you along. The AI, you've got to embrace it, and what have you. I mean, who would have thought 5 years ago we'll be sat here doing a podcast? It's,
I agree with that. Yeah,
with a civil.
So we are forward. We are forward thinking, and a lot.
We are very forward thinking. Yes,
It's a vlog.
pride myself.
Podcast. So
Forward thinking.
things will change. Things will adapt. We will be at the forefront.
What do you
making
think?
sure-
I mean, you're the business owner.
Yeah.
How are you going to adapt into
The thing, if anything, I mean, look, I've been doing the job in the industry for 22 years. Feels like yesterday, but the changes you see happen very gradually. The market, the ability to lend and the willingness to lend changes all the time.
Yeah.
It's a very credit crunch where banks stop lending. Being a mortgage broker then was great. You couldn't even do your job. Even you had a really good case at 60% loan to value. Banks were going, nah, I'm not sure
Bit
about
risky.
that. What? To actually then turn around when they want to chuck money out there, left, right, and centre, and then something happens. For example, COVID.
Right.
The market froze, and then the risk guys in the bank go, "Oh, well, last thing, the market's going to crash. It's rubbish. Blah blah. We're expecting a 20% drop in house prices." What happened in June, July 2020? The market just blew up, and then the government put a bit of stamp duty holiday on there, and it just went absolutely mental. But during those few months, the risk guys in the bank could try and say no to everything, and yet the demand was there, and it was just go, what, you had two
Yeah,
forces.
I think what isn't taken into account there is what makes the property market unique, and it's the human desire to move house or buy something. These are not stocks and shares. Absolutely.
But the point I'm making is it's actually human beings that are actually trying to play with what they're predicting the market. And obviously, if you had a risk in the bank, you're looking for danger signs rather than being the sales side of the bank who's trying to hit their targets. You get sometimes the risk guys take you down different paths. So where I see things going, and my background doing my civil engineering degree many moons ago, is that engineers, they push so far until something goes wrong, and then they have to put it all the way back.
The breaking
analyse.
point.
There's a famous one up in Dundee. The railway bridge collapsed 120 years ago because they tried to do it too cheaply and what have you. Trains going over it, and then the whole bridge collapses. So what they then do is they go back and look at why did they not put enough steel in, redesign it, and the risk guys get hold of it, and actually. And then it goes again, and then the next engineers came in and forgot about it 20 years ago and push it forward. So what you find is things change, but all it takes is one bomb to go off. One bank to do something silly, or the systems have failed and lose a few £1 million here and there, and then they go back and then they develop again.
Recently, with one of the high street lenders, who I think they got in trouble for additional lending or lending more than they should have been doing.
That's a refund.
And then they've gone the complete other way. And now they are super cautious. Their timeframes, it's checked by one underwriter, second underwriter, it's got to go to a third. And we know that that lender is very slow. It can be slow, depending on what. It's not always very slow, but depending on.
But it's a good example as to how things go when the risk guys get involved.
They've had to undo what they've done.
So are they actually going to go, right, technology, AI? I mean, the technology's been there for years. I mean, there was a company called Adeus in 2007 that used to do auto valuations 85% and do mortgage offers within 24 to 48 hours. So it's actually been there for a long time.
That's Birmingham Mitchells, wasn't it? The 24-hour mortgage.
Yeah.
Never was 24
exactly.
hours.
And then the credit crunch hit, and then that just it got left there for quite a long time. So and that's a good example. Technology's there, the credit crunch hits, and they have to then take a low step back to get back to where they were back then, and it will go like that. So where do I foresee it? It'll only get integrated. Probably processing jobs and things like that may be taken out of the equation because everyone's looking to save money wherever they can. But the advice side and all the anomalies with buying property and taking a mortgage out, property values, type of properties, there's so many little anomalies out there that a computer will either guess at it in the same way as ChatGPT does and get it wrong. And then it just takes one really bad thing to happen. And then Mr. Risk would go, no, we're having this back now, and then
And then
take steps back.
You've also got AI within the home as well, because you've got green, some lenders are now offering green mortgages. The government are offering grants if you did do certain things, or certain lenders will give additional funding to make your home a better EPC rating. You've got the EPC rating that's being under review, I think, as well. And the lender we spoke to the other day were talking about each home in the future being like a mini substation, sort of being self-sufficient, looking after their own electricity and, heating, etc. So I think AI is going to be more than just with mortgages. I think it's just generally in the whole
Yeah, I mean, in the world,
housing
in
economy.
housing, yeah.
It's going to be massive.
That's what we think's going to happen.
Yeah.
We've been saying this for years, over the years.
It's quite scary when they said they were going to be mini substations.
Yeah, it'd be interesting to see where we are in 20 years.
Yeah.
Probably nothing like.
And I don't know how they're
so,
going to do that with flats either. But
Well, yeah, yeah. Well, we'll see.
I mean, that's actually a good topic area, actually. So the green mortgages that are available to us, where do we actually see that going forward, and how that can actually benefit the environment?
Mine is interesting because, in all
There's
honesty,
very few of them, and normally the rates
Yeah.
are available anyway. They just
some of them are good. Some of them are better, more preferential.
they're more
marginally
preferential, and the cashback is good.
and they give good cash
Yeah,
back.
But
yeah.
who
They're better-
actually has an A or B
B
rated
rating,
home?
yeah.
Especially if a lot of
Just,
especially if a lot of transactions are
Yeah.
centric to older or period property. You're gonna go great.
But it's
guns
not
to get
just
that
about the
to a bit.
interest rate for a lot of these things. It's actually all the other incentives that started to offer.
Yeah, incentives on cashbacks and whatnot else.
Like
It can be
making
very
your
great
home
products.
more efficient.
Exactly.
Yeah, and it's
a lot of new builds because we're sort of London centric in the business. So I don't think I've done one for ages. I've probably done one or two, but because
I think we're in
A
a
or B.
to go back into the housing market side of things. We're in a very tough new build market for London at the moment.
Yeah,
aren't we?
exactly. Yeah, but yeah. So I mean, yeah, the green ones are great. It's good to encourage all that, but
And do you think
there's not a lot of people
a
falling
mortgage
into it.
broker can actually help change?
Help change. what?
As in, like, encouraging these type of products? Is it actually going to bring much benefit to the environment?
Hard to say.
So that's a very
That's a
hard one to
political
say, isn't it?
question.
That's a great question, Dave.
For a
There you
different-
go.
for a different-
Yeah, to get onto the green agenda.
What do you think?
In the basest of base terms, yes, you want everyone to be able to do this. You want everyone to be more energy efficient.
It's going to
but-
be better. It's
should
going to be
be.
better. Yeah.
Yeah.
Better for the environment.
I think we've got some of the least efficient housing stock in Europe in terms of energy efficiency.
Yeah, but one of the coldest countries as well, aren't we?
We are. I mean, I can
Winters.
understand that you don't need as much central heating in Sicily as you might do in London.
You need more
but
air conditioning.
You might, you need more. Absolutely. Although they were designed for heat, weren't they? Their houses, they were a little bit more pre-thought than we've got right now. I think you are into eras of change, and COVID was a massive change to the housing market at first, sort of fueling even more fire on the low interest rate era that we're most certainly out of now, and we're going to be in a position where I think the rates that we've got now are going to stay with us, and this is going to be the playing field for a good few years.
Yeah.
Probably longer than that until the next thing happens that might change.
Yeah, if we're talking about interest rates in general,
Yeah.
I think where we are now, I think we're not going to fluctuate more.
It's like MTV used to say, isn't it? If you're not part of the solution, you're part of the problem, isn't it?
Right,
So
yeah.
you got whatever you can do can only help the situation. So
Yeah, that's it.
So just going on to a few other areas. Few misconceptions or actual myth busting sections. So interest rates, mortgage rates, base rate decision comes in. How does that affect my mortgage?
If you're on a tracker rate, it affects it directly. If you're on a fixed rate, the money's already been bought by the bank some time ago.
What do you mean by being bought? Surely the bank has the money already.
They buy it on the open market from other banks. That's start lending money to the other banks, and they buy it on
What? The bank buys money? I don't understand.
All right. Yeah, I mean, the banks buy the money in, and they'll buy at a certain rate on a swap rate. I'm not a swap broker. I'm not in the money markets. I understand how it works to a certain extent. And the bank will then put a margin on it, and that rate will fluctuate. They'll get it. They'll buy that money. They'll have it at that rate, and they'll put it to market with their margin put on it.
Right.
If base rate changes the next day, it doesn't change that rate. You're on a fixed rate for 2 years. You've already got your application in. That isn't going to change.
But surely if the base rate's gone down, the cost of that money's gone down straight away.
the chances are that was already factored in.
Yes,
you know,
already baked into the price.
we saw
Unless you're on a tracker rate, it's not going to change the rate.
So how do they know?
They take a punt.
They have economists in the bank, don't they, that decide whether or not it's a good time to buy it, and that'll
They predict
decide
where they
the
think
price.
it's going to be, and they price accordingly.
Exactly.
Yeah. So what we tend to find is that the banks already know where the monetary policy's heading.
They've got an idea. Let's prove it.
a lot of the pricing.
They're not always right, though.
In terms of thinking about taking out a mortgage and you're during the application process, so you're just considering, we've not even submitted yet, the base rate hold or reduction, the chances are that's already been baked in. These rates have already been repriced. Probably I would always say in the month leading up to an MPC meeting, you'll start to see banks already make their decisions about what's going to happen, and they'll have priced it in.
And
so whatever that event is, the chances are it doesn't change
your application, because you have to make an application anyway when you go under offer. If that lender then, continues to reduce rates, then we can supersede the rate. So you can make an application, you can reserve a rate, and if it goes down again, great. Well, we can supersede that. We monitor the rates anyway for you. That's something that when you go direct to a bank, that's a real faff to do yourself, isn't it? You have to keep looking, and has Barclays reduced my rate today? And then you might miss the window, and then you go to make a call to actually, I want that rate now. Can you change it over? Whereas, we do that pretty instantaneously.
Okay, so apart from a rate decision cut or whatever, what other factors influence the cost of the mortgages?
Inflation.
Okay.
Yeah, all outside economic factors that
affect the cost of the bank's getting.
Yes, I mean, we've got the budget looming, which is going to be interesting.
Sentiment affects it a lot as well. I mean,
everything is.
It's just general markets.
All
That's
markets
what
are
they're buying money
sentiment driven. Yeah.
So whatever they buy the money at affects what the price is, and what affects that rate they're buying the money at is the general
and what
economy
is doing, and what their interest rates are doing.
Everything
that affects our mortgage market as well.
Okay. So the inflation target is what again? So what is the
2%?
2%.
We're at 3.8.
So they basically look to keep between 1 and 3, don't they?
They use a base rate to take money out of people's pockets to drive prices down and reduce inflation.
Okay. So. Any thoughts on if they were to change that target, how would that affect things?
If they were to change the
target to 3% or 4%,
go down.
More actually, the government set the Bank of England a target of having inflation at 3 or 4%, rather than actually.
We might get some more base drops.
Yeah, you'd see a couple of base drops because then you'd keep it probably within line.
More of a system. At the moment, they're trying to pull it down because we're at 3.8. We want to be at 2, so they're trying to pull it down by keeping base rate high up there, if you know what I mean. Higher than it should be.
There are so many things we can't.
Yeah.
You can't influence just as the UK, but then also you probably would have the argument: why are we using some of those markers to set? Why are we using some of these markers as data for us to use when we set the base rate? If we can't affect it as a nation or a country, why are we actually using?
So I'm a buyer, whether it be a first time buyer or whatever. How much of this data should I be monitoring, or should I actually care about it? Does that influence when I'm going to buy?
Well, it depends on you and your opinion on the market. If you're a money person, a finance guy, and you feel the market is going to go in a certain way, and you've got a certain risk threshold, it may affect you.
It depends how quickly you need to move. I wouldn't.
Yeah.
I've always said, if you need to buy now, because the alternative of not buying might be worse than the alternative of buying if it does go slightly right. But in terms of cost of it, in terms of mortgage and interest rates, if you use a broker every 2 years, it gets changed, or 5 years, whatever your circumstances, so you don't need to monitor quite so much.
Yep.
But if you want your own opinion, then follow the news, follow the economy.
You should always be. You should, shouldn't you? You should
have an idea, and then you can form your own opinion on. I think the economy is really strong at the moment. If you're in business yourself, you might have your own view. I think the economy is really strong. I think interest rates are as low as they're going to be for a long time. They're in a nice place. I'll go with a 5-year fix. So I think rates are falling over the next few years. I'll just do a short-term fix. And you have your own opinion. But speak to your broker and he'll tell you what's happening in the mortgage market.
I've got a friend who's got a 5-year fix at 1%. Can you get me that, please?
Yeah, of course.
And it might affect just how much they want to borrow. If they're a bit sort of risk averse, or they feel that the market's going to drop more, or everything again is just dependent on what that person's situation is. So if they're having a conversation with you, they're obviously thinking about it.
Yeah.
And if they need to move, then they need to move. Like you say,
and you might have that mate who's got 1% mortgage. My mortgage rate begins with 1% at the moment. I'm not showing off because it's due to come off next year.
Yeah, it's about 6 weeks of that joy left.
So how do I get one of these 1% rates then?
That was the time. This was a long time.
That was where the money markets were at that time.
That was the rate.
Where the
Interest
market
rates were
was.
so low. They went down to 0.99. If you'd tied yourself in at 0.99 for 10 years, happy days. You've done really well.
They even did 10 years at that level. But
I know. Yeah,
5-year fixes they did.
Yeah, there was some 1 point.
But are those times ever going to come back again?
Who knows? Probably not.
Not in recent future. No.
But when they
Not in
arrived,
close future.
I don't think they'd been forward. If someone had said to me 10 years before that, we'll have interest rates at. If someone had said in 2007 you'll have interest rates down at 1% in 2020, whatever.
For a and for a long time.
Yeah.
I mean, I remember
that'll never
country
happen.
does that. I mean, if you think about it,
Japan has had negative interest rates for numerous
Forever.
aside from Japan,
Yeah, but then borrowing's 200% of
exactly.
GDP.
No, I mean, look, I'm obviously asking open questions, but if I think back to that summer of 2008, I had people taking 5-year fixes around about 6%, and then within about a year, the interest base rate was down to 0.5%.
So base rate overnight.
So I mean, I always think for anyone that does everything, they're going to come down to that level again. Well, you have to question why they would go down to that level. That means that there have been some pain that's happened for the Bank of England to take action to reduce interest rates down to that level. So actually, it's probably not a good thing if it were to get down. It is obviously going for over time. It fluctuates with inflation and everything. The most important thing, really, I suppose I'm getting at is it's not just about the interest rate. It's about making sure the monthly payments for the client are affordable, aren't they?
Exactly,
The actual interest rate, yes, you want the best deal, but it's making sure it's affordable for the person that's able to take it.
I would say in this, we almost call it a post-COVID environment, but certainly in this environment of 3, 4, 5% interest rates, this is the first time for a very, very long time that people are not borrowing all the way up to capacity because of monthly payments, because they are tailoring it to a budget. Whereas previously, and this was probably quite evident you'll see the fueling of house prices was incredibly cheap debt.
Well, we've got lenders now going up to 6.5 times.
Yeah.
Lender recently came out, and that's just going to fuel house prices, surely, if more lenders do that.
It is if more lenders do it, but I also think there'll be a ceiling of people making a decision to say, I'm quite simply not spending that.
Around it.
Yeah, that I'm not spending that much.
But if it's affordable, isn't that fine though?
It depends on what affordable is. If you can just scrape by, someone might deem that as affordable, but others might not. I think it's really important to lead.
But as a broker, you go for it. You do the sense check. You do all the affordability checks. So you are making sure it's affordable.
You're absolutely making sure it's affordable, but then it's down to people's own personal discretion as to whether their definition of affordable.
Who wants to give up?
It's the same
You're
as
going to
that.
have kids in 2 years.
Yeah, what are you going to think about?
There's loads of things.
There's so much to think about. You can't, just because you could squeeze every last penny out of your application doesn't mean it's the right thing to do.
No, exactly.
Not at all.
But then isn't the danger that I don't buy, and with the whole Renters Reform Act and everything like that, it sounds like there's going to be a lot more pressure on rental prices going up. So if I don't take a mortgage, which I can afford, I'm going to get stung with a...
Well, we've got to see the impact.
I think we need to see the impact.
We've got to see the impact of that bill.
Yeah, but historically, isn't renting more expensive than having a mortgage?
Depends.
They're also
It depends where you are.
Yeah, it depends how good your rental deal is. It depends on your own person.
Plus, there is a limit in Renters' Rights Reform Act, or whatever it's called, into how much you can put the rent.
Yeah, that would be interesting.
But the rental cap is only going to be versus market conditions. So if the market dictates it can be rented at that level, that's its scene.
I don't think this is the golden bullet for tenants that people would hope it is. I think it's, look, we've seen in the last 2 or 3 years with tax changes, would be able to name you 20, 30, 40 buy-to-let investors and landlords that have sold their places and exited the market or are presently trying to sell, which is not a good thing for tenants. The less stock that's out there to rent, the prices are going to go up. So I do not think this is a cure-all at all. I think it has best intentions.
Particularly with the lack of stock in London.
Yeah.
With the amount of stamp duty and all of the transactional costs, some people it may actually work.
Yeah, we've had
Say they're overseas and they're coming here to work
Absolutely.
and they don't know if they're going to be staying. I would also say to them, is that necessarily the best option for you?
I think what we're doing is we're moving out of an era of any element of speculation in house prices. I do not think anyone anymore is going to buy a flat for 2 years because they're going to work or study in London.
Maybe
for 2
not at the
years.
moment, but you never know.
Yeah, you do never.
Right.
Absolutely.
Prime central London has
People that
been
don't-
decimated in prices.
I find
That might be a great time to buy.
Yeah,
a piece
I find
of
the
land
zone
because
one
in 2 years
and-
you might have made a lot.
But
the
if I,
PCL debate
if I
really
revert you back
interesting.
to your answer earlier, when is the right time to buy? And you all basically said now.
Yeah, if you're going to live in it,
Isn't
and it's
the
gonna
golden
be-
rule to be a homeowner regardless of whatever stage
No,
that's
I think
No?
that's
And I think that's a
well
myth
long gone.
to be a homeowner. I don't think you have to be a homeowner to, succeed in life. I think that's that's a very British thing, actually.
Depends on your pension arrangements. You get to age 17, retire or whatever. I'm not that far away. Then if you've not got a
Looking
decent
forward to that
pension,
party in a couple of weeks.
yeah, not that close. If you haven't got a really substantial pension, you've got to pay your rent when you're retired. State pension isn't going to pay it.
No.
So if you've bought and you pay down that mortgage, you don't have to pay the rent when you retire because you paid it off.
But then that person, I know this is obviously we're brokers and we want to help people with mortgages but we're not there to tell them that buying a property is best for them if it may
No,
not
it
be.
depends.
And that's not our decision.
No, it's up to them.
But somebody could be, instead of investing in a property, might be a very savvy investor, and their portfolio may be making them more money than, let's face it, in the last couple of years.
So chuck your money away on rent then.
I mean,
isn't it?
some people bought in Central and actually lost,
but
lost
that's
money.
time.
So-
And that's
But that's on today's conditions. That could change
It could
in
change.
10 years, as you say. So
Yeah.
But we don't know because you don't know what investments that person has, there's an element of risk to everything. I think the nice thing about property is that it's bricks and mortar and it is a relatively secure investment.
Well, you can live in it.
You can
can't
live in it,
live in
and
your
it-
stocks and shares portfolio, certainly not. And
I
if
mean,
it's
you
one
want
of
to
those,
buy your own home for investments to live in, isn't it? I mean, you want it to do well.
I think that's it. I think we've gone
that's
away
good.
from an era of buying your personal home or buying a residence that you will live in with investment almost driving 50% of the decision.
Yeah.
It is now you're buying it because you want to live.
Yeah.
Yes.
So on that side of it, is it a good idea to become a landlord?
The direction of travel at the moment is against landlords from
Yeah.
government policy.
I think they're
Taxation.
So you can set it up under an SPV, limited company, and get some decent sort of rate, rates in terms of tax breaks. You don't pay as much tax on the rent, etc., etc. But the mortgage interest rate's higher. Is it a good time? Depends if you get a bargain. I mean, you've got the Renters Reform Act coming in.
Yeah.
So there's loads of negatives against it, which might make it more attractive because a lot of people are pulling
I
out.
think
So
you've got to take a view that I think that the difference in my eyes, obviously the transactional costs, stamp duties, everything like that, it's now not a short-term investment.
Oh,
And
no,
like
no.
we used to probably deal with landlords that flip places left, right and centre. Now it's like, right, we're going to do this and even set up a limited company, pay the additional stamp duty. It's like, right, I'm going to do this. I'm doing this for the medium to long term. This isn't a buy it, get a quick win.
Yeah.
And it's so much, unless you live and work and breathe in a certain area that you know it inside out, and you know you've got a potential bargain on your hands, or you can negotiate hard.
Yeah, it's got to be long term, otherwise
It has to be. I think
because
as-
you can't get. You don't want to be changing your tenants 2 minutes as well. You need
But
to.
there was
think
in
that's
the
all-
agency that we worked in, there was said landlord that in, I think, 2008 went and bought up a whole load of properties, and it's not always about obviously you want the rental income to make sense, but those properties then grew in value because he bought at the bottom of the market.
Well, he bought for equity growth, didn't he?
And then those properties, the guy didn't need to work. Obviously he didn't need to work to start with because he had a very large portfolio and large fund, but he made a lot of money on those properties. And then he sold in the height of the market.
It's timings.
And the timing's
A lot
right.
is good timing, and if
He's
you're
lucky. He could have gone the other way.
It could have gone, but exactly.
But there was a lot of people at that time made a lot of money on.
I also think we need to be probably a lot more positive towards the private landlord as well. A good one has its place within the market. Yes. Certainly, I think the era of someone that is charging the yearly rent that's the same as what they paid for their flat in Balham back in the 70s. A bit more
regulation.
Yeah, absolutely. It is awful. A
bit more control. There are some terrible landlords.
Yeah, there are.
But that's as a little side question. How about bringing back 100% mortgages?
Well, there are. I mean, you can get track record mortgages at the moment, or 100% mortgages, although they are few and far between.
I think as long as they are underwritten and advised on safely and prudentially, then they're absolutely great. I really do. I think.
But when they actually existed, they were probably the most stringent underwriting out there. So back in the noughties, a lot of lenders did what was called fast tracks, where they didn't even check things. Whereas you apply for a 100% mortgage, they actually dragged you through underwriting properly, actually did a proper job on it. So
there's probably less defaults on that market if you look back at those clients and those properties than there was on the fast track.
And they weren't actually 100%, it's the whole fallacy. They weren't actually 100% mortgages anyway. They were 90% secured and 10% unsecured. And there are banks out there that will do 95% and allow you to take a loan. So in essence, it's 100% lending. So
I don't feel that banks are bad or they're not trying to put the effort in to get first-time buyers on the housing ladder. I think they are. I think it's just very important that as a first-time buyer, you were advised properly about what you're about to do.
It's whether or not the banks want to take that risk.
And also a lot of lenders are giving enhanced affordability for first-time buyers. So there is a bit of help at the moment. But like that one lender said that we met with the other day, they said they can't be the ones to, open the floodgates because
I think if it's a government-backed mortgage,
they can, but choose it not to.
No, but he said that if they did 6.5 times income multiples across the board, because at the moment that is limited to certain buyers, that they would be so swamped with business that they wouldn't be able to handle it. So they said that everybody would need to do that at the same time, so that they weren't the only ones.
I don't think there is anything wrong with mortgage financing being limited is a silly word. I think there's nothing wrong with it being prudent. I don't think it needs
because everybody's affordability is different. My expenditure is different to yours, different to yours. So to lend me, say, 6.5 times when my expenditure's through the roof is a bit stupid compared to someone else's expenditures.
Yes, I do not think the whole industry should be designed to fuel house prices.
I think this loan to income caps, forget about it. I mean, it's all down to affordability.
Yeah, I agree with Ivan.
Well, look, the thing about in this industry and doing this job is no client is the same. Every client is different. That's why advice is necessary. That's why the computers will do so much. But, us as advisors will still have that relationship and give proper advice and actually make sure the client is looked after. Rather than a computer telling me what the bank statements are saying.
And also I do see that some lenders do take advantage because it is a riskier thing to lend to a first-time buyer, but they charge them for it. So you have certain lenders that give first-time buyer products, but then they are a higher rate in comparison to a home mover product. Or if one lender gives that 6 times income multiple, but they will only give it to you if you do it on a 5-year term. You might not want to borrow it for 5 years. So, I mean, I think that not all lenders are they give a little, but then they're not necessarily super fair with the way that it's done.
But the banks, at the end of the day,
but then they charge for it.
Yeah,
exactly. So no, but I think if a few lenders were like that, and I think it is going that way with this new lender who's just announced 6.5 times, because before one lender was doing 5.5 times, and then another lender copied it, and then another lender copied it, and then that lender went, well, now I'm going to do 6 times, and then we've got another lender who's now gone, well, actually, I'm going to do 6.5 times.
It's aimed at London. That you could be on 100 grand in London, still be skint. If you're on 100 grand in most of the rest of the country, you've got a lot of surplus cash. So to lend you 6.5 times in London.
Well, they've taken the risk away by saying you need to earn 100 grand in order to.
Yeah, but 100 grand in London is not necessarily a lot because your expenditure is so high. So it's difficult whether or not that'd be a good thing. But going back to your original point, 100% mortgages, I think if there's some kind of government-backed mortgage indemnity policy to give them that chance, or maybe take parents into consideration. Mick, you had to pay it over 85% at that time.
You said back in the day when those 100% mortgages existed, they were barely policed, so to speak. So it was really easy for some people to get them. They were self-cert mortgages.
Well, no, you didn't
So-
get that self-cert 100%. You still 100% mortgages you actually got in the were actually.
You'd be properly
Self-cert
underwritten.
was like 60, 75%.
You can get 85% of them, but yeah, that
But
was,
back
you
in the
did
day,
tackle it,
it wasn't the same as it is now.
no, but the regulation wasn't there, and,
No.
and the what
No.
it was the Wild
No,
West in a lot of
it's-
ways.
Yes,
Exactly.
but
Again, that just shows you how any industry evolves, switches, and then all of a sudden things go wrong, and then it all has to adapt again. But thank you for your time today, everyone. It's a pleasure as ever. So,
Thank you for the invite.
no problems.
Been great.